Good morning, guys, or good afternoon. This is Darin Marques. I'm here with the Darin Marques Show today, and I've got a good friend of mine, Chris Biaggi with All Western Mortgage. Chris, how you doing this morning?
Darin, thank you for having me. Doing well yourself?
Doing awesome, man.
Good.
Doing awesome. So I'm really excited. Chris brought his crystal ball today, which is really important in this market, as we all know.
Let me pull it right out of my back pocket here. Yeah.
Exactly. We know that's so important in this market, and thankfully we all have one, right?
Exactly.
So,
yeah.
So anyway, guys, I wanted to start off. As you guys know, Recession Busters is talking about obviously, people that have gone through the recession back in 2008. They were able to survive, and I always like to say thrive through that market. And as we know, most of us talk about that we're going into a recession again. And so what I'd like to do is come up with, instead of looking at the negative side of it, is that in every recession, you read all these stories where a lot of these highly successful entrepreneurs and everybody else come out of the recession stronger because they saw opportunities in the recession. And that's really what this show is about. And so that's what we're going to cover today. And Chris has got a really great story I learned about at lunch a while back. And so, Chris, why don't we start? Give me a little background on yourself and your company and how you got started in mortgage industry.
Yeah, so mortgage is all I've ever done. I started at 19 years old. I've been in the business over 30 years now, 53. So you do the math.
So you know a few things about mortgages.
A couple things. Been through a few challenging markets for sure.
I bet.
Started in the Bay Area, San Jose, early 90s. Interest rates were double digits. We talk about 6.5% today. We were doing loans at 12%, 13%.
In the 90s?
Early 90s.
I didn't know that. Wow.
Yeah, absolutely.
Okay.
So bottom line, the market was at its worst.
So you laugh at 6%.
I don't laugh at it.
I'm just kidding.
But I do laugh. Yes. It's all a matter of perspective, right?
Exactly.
But ultimately, I was in a position, I was in my early 20s and had to decide I was either going to find a new career or find a new place to do my career.
Okay.
So I chose the second. And one day, I had heard Las Vegas was starting to pick up. There was activity, again, early 90s. And I said, hey, I'm going to go for it. So I literally packed up my car with my clothes, had never been to Las Vegas. I was dead broke at that time, living off my credit cards. And I drove from Santa Cruz, California to Las Vegas. Pulled up, stayed first night at the Excalibur, and then for the next 3 weeks,
Las Vegas's finest.
Exactly. I stayed. Well, it got worse. I stayed at the what was it called, the Vacation Village or something like that. It's not even there anymore. They tore it down. It was so bad. I had to wear flip flops on the inside. It was so terrible. So ultimately, that's how I got here, and from there, I joined All Western in 1995.
Okay.
10 years later.
All Western was an existing mortgage company?
The company's been around since 1984.
Oh, wow.
Actually, yeah. So joined in 95. 10 years later, I decided, hey, let me make the next move in my career. So I bought the company from the original owners. It was a smaller mortgage broker shop at that time. And then from there, just started to grow the company. All of a sudden, 2008 came along. And really, it was kind of interesting. Just, I don't know, dumb luck maybe, but we had remained as a broker.
Okay.
I made that decision, started to move towards the banking side, but sort of saw the headwinds coming and decided to hold off on that. And ultimately, that was a great decision. A lot of our competitors were not able to make it through that time period. And that was actually one of our larger growth moments in the company.
Really?
Absolutely.
Wow.
So when you talk about opportunity and what different markets, different cycles bring, for me, that was one of our larger growth moments, single moments in the history of the company.
And what was it about that market? What were some of the opportunities, just to unpack that a little bit? What were some of the opportunities you found in that market? Obviously, when everybody else was struggling.
Yeah. Well, first of all, a lot of companies just completely close their doors.
Yeah.
So just the ability to stay open, the ability, the stability that we had, right? 1984, here we were, 2008. That's a long time to be in business. So when, if you're a loan officer and you're saying, wow, I showed up at work today and the doors are locked at my company because they've gone under, where should I go? And so we sort of became kind of a beacon of stability and consistency in Las Vegas. So weathered through that, became a mortgage banker, grown, and now ultimately will lend in a little over half the country, full mortgage banking and so forth. So
let's go back a little bit. So just some perspective on those 10 years that you were at All Western Mortgage before you were owner.
Yeah.
What were some of the, number one, just to give perspective, how many loan officers were there at the time?
15, give or take.
Okay.
Yeah.
And what were some of the things that you would do on a daily basis? Obviously, you were coming from a market that was challenging. So when you got to Vegas at that time, were you still seeing, were still the high interest rates and everything at that time?
Rates just started to come down. So it did create some refinance opportunities, which we don't have at this very moment.
Yeah.
But ultimately, there was activity.
Yeah.
People were buying and selling homes. Builders were building homes. That was absolutely different for me. And I'm a grinder. My thing was when I got to town, my mission was first 90 days, there was no day off, 7 days a week, 12 hours a day. I didn't stop till I hit that 12th hour.
Wow.
And that was 7 days a week for the first 90 days. I closed my first loan within 45 days of landing here.
Wow.
So, and that was just
And how were you finding that business? Were you calling agents?
I was walking, then it was a little different, right?
Yeah.
But I was walking into doors. I would talk to escrow officers. I'd talk to title officers. I was talking to account executives. Anywhere that I thought a mortgage may live, I was in that door. I was pounding pavement, making phone calls. That was just the focus. It was just build, try to make contacts so that I could generate some business for myself. Really
boots on the ground.
Oh, 100%.
And I love hearing that because that's one thing I've even for myself recently, I was talking to a friend of mine and we brought up an idea about going out and just going and seeing people in person. And I'm like, holy crap, man, we've gotten so used to digital marketing, right? Video and ads on social media and that type of stuff. Working behind email and working behind text messages that I think salespeople have lost a little bit of what makes salespeople, which is that grind of going and knocking on doors, getting to know people face to face. And I'm returning to that myself personally. I've got back to doing that. I really encourage my team to do that. So it's great to hear that, those basics are what worked for you in building your business back then.
Well, look, at that time, there was no social media. Right?
Yeah.
So that was the only way to do it. But I want to make what I think is a very important point. Good thing for you and I and others who might be listening to this, that this is still a relationship business.
Yeah.
Because once it stops being a relationship business, guys like you are in trouble.
Yep.
You and I are in trouble.
Exactly.
Right? So I think that to me is important for us to really understand. You're right. All those tools are critical. They're important to our business, but they're just one pillar of what we should be doing. That relationship building is critical to our long-term success. And again, thank goodness that it is, because otherwise we become commoditized and we become just like everyone else. So, yeah.
And that's a great point. You actually brought that up the other day when we were talking at lunch about relationship building. And I think, nowadays, because everything moves so much faster, it's always funny when I hear somebody say, well, I've called that person twice. I never heard back. And I'm like, twice? I'm like, dude, I've called people 50 times. My rule of thumb was either they file a restraining order, right? Or they buy from me.
Right.
So that's kind of my theory. But it is interesting. And I think a lot of that does just come from from the technology. I think people expect things faster and quicker.
Yep.
And so they forget that the important part is, and I see this, so you and I were talking about this, I see it on the other end now, people coming to me. And it's interesting to see sometimes they'll make one or two calls to me and then they're frustrated if I don't meet with them right away, or why am I not sending them business yet? And we were talking about it's just being top of mind, right? And I think that's where being in person and making those face-to-face contacts is so important in developing business. And I think now more than ever, right? Because everybody's still using the same strategy, which I find is interesting, is that everybody's still just sending emails or text messages to try to introduce themselves and create the relationship. And I think, man, there's nothing that would be stronger than if you showed up at my office and said, hey, I'm here to see you. I want to talk to you face to face, Well,
it's interesting. So this call we had was Wednesday. So probably 300 people on it, All Western Mortgage call. And it was about relationship building. Okay. So great timing here. And for us, it was more on the recruiting side. Although I have abandoned the word recruiting and I've replaced it with relationship building.
Yeah, right? I like that.
So whether I'm a loan officer or I'm a branch manager who's trying to build his branch, a loan officer trying to build their referral partner base, it's about a set of actions over a consistent set of actions over a long period of time.
Yeah,
right? And you're right. Too many people want to do the one coffee at Starbucks and think that you're going to start doing business.
Yeah, tomorrow you just turn it all over.
if you take the next 12 months and do nothing but work on building relationships, imagine what you'll have at the end of that year.
Yeah.
Don't worry about the business.
Yeah.
If you build those relationships correctly, the business will come.
And I think that's such an important factor, because that's where I do think the opportunity is in this market right now, because everybody is panicked, right? They're looking for that quick turn. They're looking for the quick buck. And hey, can you start sending me business right away? But if somebody methodically just said, now I'm going to spend this time as we're a little bit slower to go make those relationships. I'm not going to focus on the money. I'm going to stop in every few weeks. Think about what I can bring that person, what service I can provide for that person, right? And how I can help them. I think that's the other thing, is that I always find, it doesn't matter what sales. I even shared this with my team the other day. I said, if we're doing the standard and we think that's good, there's a problem, right? Because that's what's expected. And we should be doing something that's outside of that, that's a little bit different. And I think just even creating those relationships, I even do it with other agents, right? I think it's so important that I go sit and meet with other agents to create those relationships, so that when I do a deal with them, or even the loan officers, going and meeting with them and having lunch with them and not even talking business, but just creating that relationship. Because I love that you brought up relationships, because I think at the end of the day, it's one of the most important factors in making a transaction succeed.
Oh, yeah.
Because I know in situations where I've had good relationships on both sides and we've had a really rough, transaction, thankfully, because of those relationships and how we could talk and communicate with each other, we were able to work through those challenges of that, whatever that deal was, to move it forward. So,
yeah. Well, I mean, in that scenario, it's the rapport that you've built with that individual that helps carry you through whatever those bumps along the way are, right?
Yeah.
In my career, not every one of my loans went smooth.
Yeah.
Right. But if you and I did business when I was a loan officer, you and I would have a very good relationship, and you would trust me.
Yes.
You would know, hey, look, Chris says this is the issue. He says he's going to fix it, solve it. I'm going on with my day.
Yeah.
Because I know he's going to. And I think as you're looking at how to build new sets of relationships, again, I don't even want a loan from you for 12 months, Darin. What do you mean, Chris? No, I don't want one.
Yeah.
I don't know if I want to do business with you, quite honestly, right? So, so the bottom line
gotta make sure that relationship works both ways.
It has to.
Yeah.
I'm sort of being a little bit sarcastic, but ultimately it's about, bringing value, and that word we use a lot.
Yeah.
We got to really understand what that is and what that means to us as individuals and the people that we're bringing it to. And it's different for everybody. You may want education. You may want marketing assistance. You may want whatever it is, information about the economy, what the Fed's going to do with interest rates, right? But I'm going to bring you that value. We're gonna build a relationship, and at some point along the way, you're going to decide, hey, you know what? This is an opportunity I'd like to give to Chris.
Yeah,
and I think that's the way to build those long term kind of real good referral partner relationships.
I agree, and I agree. Because I was even talking with the team about it the other day. I said, being top of mind is important. I learned this. I owned a retail store years ago, and I couldn't figure out why anybody wouldn't come in and buy from me. And I was right in the parking lot of this gym. And I thought, man, this should be easy. Like people, but what I found is I would run into people that I knew that shopped other places, and they would say to me, oh, Darin, man, I'm in such a habit that when I drive out of the parking lot, I go right, and I keep forgetting to go left to come see you at your store. And it made me realize, man, I need to make myself top of mind. Yeah. I need to put things in place that when somebody calls for a lender or an agent or whatever, that I'm the first person that they think of. And the only way that I can do that is constantly being in front of them, not pestering them, creating that relationship, bringing them value, so that when they do think of that, I need something, they're going to think, oh, you're the first person that I'm going to reach out to. And I think that's really, and that doesn't come overnight, right? I mean, that's like you said, that's months and months of building that relationship and essentially reprogramming the way that person thinks. Because when you're in business mode, right, and somebody asks you for something, you're just thinking of that first person, and that's where you're going to go. So I love the conversation about relationships, because I think it has become somewhat of a lost art with sales. And I'm myself personally, I mean, I know I've lost a little bit of that. I'm pushing to get back to that more and make that a priority in my business. Let's talk a little bit about 2008, because I love hearing from the new agents today who are panicked and they keep using the word that we're going to have another 2008. And I'm like, this is a completely different time in the market than what we saw in 2008. what were some of the indicators for you in 2008 that you knew we were going to be running into? Because I know you brought this up to me before.
Yep.
You saw it coming.
I did. Look, I started, I was buying rental properties, flipping homes. I started selling at a pretty rapid pace.
Okay.
Leading up into 08. And if I was really smart, I would have sold everything, but I didn't. So I held on to a handful of homes that I thought were in key markets and would and obviously years later, here we are, they're fine.
Yeah.
But to me, it was the amount of wild speculation. That's the bottom line. And us providing loans to people who had no business getting them. The credit was too easy. Transactions were moving too quickly. There was just this up ramp that just cannot ever last forever. Right?
Yeah.
And that's what happened. So that to me is what I saw coming. Ultimately, we saw the results of that. Mm-hmm. Rapid depreciation, prices crashing, people with mortgages they couldn't afford, had no business getting, and there you go. Right?
Yeah.
At the end of the day, it was a massive sort of failure of, I think, the real estate system, and all of us were to blame.
Yeah.
I think
it was easy money, right?
Everybody in the real estate community has to take ownership of that. In my opinion, the mortgage business, the mortgage industry really sort of was the one that was front and center. Politically, obviously a lot of legislation came out of that, which I actually now agree with. I think it's a good thing. I never want to be able to offer the types of loans that we could back in the early 2000s. I do not want to do it. Don't want to have them in our product menu. Yeah. I think they were terrible, horrible.
Because back then people were doing stated income 80-20, right?
No doc, no. But and not only that, look, credit score, you could say we were doing subprime at 100%. You had a 580 FICO score, you could get 100% financing.
Wow.
But let's face it, I don't care what your FICO score is. When your house that you bought for $500,000 is now worth $200,000, and you can't afford your mortgage payment for whatever the reason is, it doesn't matter if you had a 780 FICO score at that time or a 580 FICO score. So bottom line is, I think that that was just rampant, irresponsible real estate behavior.
Yeah. And I saw a lot of that. I mean, friends that I knew had incredible credit, who finally threw their hands in the air and they said, you know what? Everybody else is doing it. Yeah. I'm going to let mine go too.
Well, I think, when and I use this as sort of a joke, but when I would go get my hair cut, the girl who cut my hair had 6 rental properties and called herself an investor.
Yeah, exactly.
She's no investor, right? I mean, that's exactly what we were dealing with.
Yeah.
And all of us were responsible and supported it.
Yeah, because the agents were excited to say, you know what? Go to this loan officer and that one and that one and that one and get 5 loans and buy 5 homes, Yeah.
And then we'd all have to grind the appraiser to get the value. I mean, it was nonsense. So yeah, I think that's what, and when you're on the ground in that and you're sort of, but you also you take a step back, you can kind of see what's happening. Yeah. Now, nobody rings a bell when you hit the top of a market or the bottom of a market. Some would say the top of our market was probably early sometime this year. Yeah. I didn't hear any bells going off. It just sort of happens.
Yeah. And it was quick.
It is. But to me, I get nervous when things run too hot for too long. Yeah. Right. And every day we are one day closer to the end of that. Yeah. Right? And so that's what I saw in 08. And that's really what I was seeing. I mean, you and I talked about that. One of the listings you had up in a neighborhood that I visited that day. Yeah. We talked about that. I said, how is this high-end market going? Where do you think you go? I think we're at the top right now. I mean, you kind of called it there that day standing out in that backyard. I remember you said that. Yeah. So you get a feeling after a while.
Well, I think really if you listen to the consumer, right?
That's a good point.
You can really, it's all driven by the consumer at the end of the day, right? Mm-hmm. When the consumer finally says, I'm done, I'm not going to pay these super high prices anymore. Yeah. I don't care what the interest rates are. I'm done. And that's what people don't realize. Before we were even seeing the interest rates going up, we were already seeing buyers who were starting to do that.
True.
We were already seeing buyers who were beginning to pause, who were beginning to say, you know what, I'm going to wait. I mean, we had several buyers that had backed out, just said, you know what, I'm done making 4 overpriced offers, waiving appraisal, pay for the inspection, paying for the people to move, all these different things, and still not getting the deal. Yeah. And so a lot of people just said, I'm going to wait. And so I think that's the other thing that a lot of people aren't factoring into this is that was already coming. Yep. The consumer had already had enough of it and wasn't going to, pay overpriced, payments anymore or prices. And so they were already starting to pause. And then, I started to see that like March and April. and then you factor that in with the spike in the interest rates, well, then that just caused people, then that absolutely told people, all right, now is a good time to wait.
Yeah.
And so now they pulled off the market and they've waited. And so I think that was already coming a little bit. And I think that was just, listening to the consumer, because the consumer is going to tell you when they've had enough. And when they stop, I mean, at the end of the day, in my opinion, the consumer controls everything, right? Yep. No matter how much the government wants to do, whatever they, people put in place or different rules, when the public says, or the consumer, just like gas prices, if consumers say, you know what, I'm going to stop driving as much, and then everybody collectively says that, all of a sudden there's less demand, those prices come back down, and then people ramp back up again. So,
yep.
I think that's one thing to remember, especially being in sales, is always kind of gauge and watch those consumers and see what they're saying and listen to the feedback from them, and really kind of go off that. I think that helps with forecasting as well. Yeah,
that's a great point. And those are the sentiments that ultimately end up with kind of the results, right, in the marketplace. Yeah. And so, and as a professional, the more we can key into that. Now, at the end of the day, look, we're going to keep selling that house to whoever will buy it, right?
Yeah.
I'm going to do a loan for whoever will qualify, right?
Yep.
But I think the key, and maybe what, part of this conversation will end up being is, okay, what do I do with that information?
Yeah.
How do I adjust my business
Yep.
so that I'm better prepared? I can't just put blinders on and think everything's going to just keep going as it is. And I think that's what's happening now. I think that's where we're at today. And the people that, whether you saw it coming or not, what are you doing today to adjust and change your business to adapt to what's happening right now?
Yeah. And I've already seen that. I mean, we started having this conversation. I started having the conversation early this year with my team. And I said, look, if you're riding the wave, you're going to go down when the wave crashes. So you've got to start looking for other strategies now and other ways of doing business. If you're waiting for the business to come in, I always use this term order taker. If you're an order taker and you wait for the business to come to you, then your business is going to come to a complete stop. What are some of the things that you guys are, well, let's go back to 2008. What were some of the things that I know you talked a little bit about what you did at that time to work through that.
Yeah.
What were some of the key factors that you saw with the people who succeeded in that market and the ones who didn't? What were the key differences?
So I think first and foremost, you have to, I actually learned this from kind of a mentor in the business years and years ago, is you live your lifestyle on the lean years. And then when the good years come, you save those dollars. Okay. So that's first and foremost,
that's great
right?
Advice, yeah.
So while in the mid 2000s, and this is the truth, I lived in the first home I ever owned for 23 years. Okay. So while all my buddies who were in the business and successful, doing well, Chris, why aren't you moving into this gated community? Why didn't you move over here? What are you doing in that house? It's a track home in Green Valley. What are you doing? I stayed in that home until just recently where that I live today. And so people who live beyond their means are going to struggle when times get tough. So that's the first piece of advice I always give. But then I think from there, it's really, you've got to understand the opportunity. You got to find that opportunity. We saw it in 2008.
Yep.
A lot of people in the real estate side, they were very creative. They all of a sudden became REO people.
Yep.
Right. I was actually very impressed at that moment for those who I would call it, they sort of reinvented themselves.
Yeah.
Right. They changed their business model. They went after what was available and where the business was. And I think that's key. So for us at that time, it was private money. We were doing a lot of what they call hard money loans.
Okay.
Right? We were doing a lot of niche stuff. Not many people had that product in town. So we were able to lend when others were not. So that was just kind of an example of how you would take a niche in the marketplace and really sort of build from it and just get through that tough time. So whether you became an REO person or you became a hard money person, it was just something different that you had to do to survive to get through that tough cycle.
Got it. Where we're at today, I know we talked about 2008 and where you saw, what was coming in that time. I'm trying to think like how to say this. So the people that were back then, how much do you think percentage-wise of the city was underwater as far as values on their home?
You'd have to say 100%.
Okay.
I think it would be safe to say that. I can't.
And the reason I asked that because I wanted to make that separation between 2008 and today's market is that 100% of the people were underwater back then. And I think that's the one thing that people are forgetting now is that I think it's like 85% of the homeowners in this market are sitting with 6 figures or more of equity in their home. And that's what I've even been talking to buyers about when they're coming out and they want to be really aggressive. I'm like, keep in mind, a lot of the people today that are selling is different than '08, because today people are sitting on a lot of money in their home and they don't have to sell. They were electing to sell because they knew they could make a lot of money. And now, and I think you even brought this up as far as you're foreseeing that there will be another inventory shortage. I'm kind of thinking that there will be as well, because what I'm seeing already, and Craig and I actually just talked about this morning, I'm seeing people who were on the market who have now said, you know what, Darin, there's no reason for us to sell. We were just selling because we thought we could make $600,000 on our house. We're going to pull the house off the market and we're just going to wait. And so now I'm starting to see inventory little by little deplete in these homes that are coming off the market with people who no longer need to sell. And so I'm already starting to see that inventory come down a little bit. Maybe it's not reflected in today's numbers yet. But again, reading the consumer and what they're saying, that's where I see is going towards the first of next year or even second quarter, is actually having a shortage of inventory again. And I think that combined with, and you would know this way better than I would, but I think also when it comes to interest rates, I think the interest rate impact that we had in May, was it May, right about May, that we had that, May or June?
As far as rates
when it
started,
first went up?
March, okay. April. Yeah, we really saw.
So when we first started seeing that and people were pausing, to me, I always relate that to the stock market. Anytime, and I relate in this luxury market, anytime the stock market takes a dip, the luxury market takes a pause for about 60 days, right? Everybody says, oh, wait, I'm going to see what's going to happen. Then they feel comfortable. And even if the market, as long as the market levels out, then they start to come back in. And I think, in my opinion, I think we'll start to see the same with the consumers as well. Because I'm even hearing consumers already justify, well, yeah, it is the interest rate is higher, but it's only X amount more than what we're already paying on our current mortgage, or it's only X amount more than what we thought we were going to pay, or we'll just adjust the price point that we were looking at. Maybe we were looking up to $900 before. Now we're going to look up to $799 or whatever it is. And I think there's some more flexibility in negotiating for them. So my opinion is I think we'll start to see some of the consumers come back anyway, once they've adjusted to, I always feel that way with gas prices. Everybody complains about the gas prices at first. And then 2 weeks later, there's a line down the street, everybody getting gas again at $5 a gallon, So are you starting to see that?
Yeah, I mean, I think first of all, obviously record equity.
Yeah.
History of the United States, we have more equity today than ever.
Yeah.
Right. So that's number one. And you also have a vast majority of these people sitting on very low interest rates, right?
Yeah.
So that is the challenge we see today. Where I see, again, kind of looking at opportunity. We are heading towards a recession. I can't imagine. Technically, we're already in one if you use the true definition of it.
Yeah.
So we're in a recession. There's a lot of things going on that are still challenging the economy. And in past inflationary times, the Federal Reserve, has basically one lever to pull, and that's by raising interest rates. The challenge now is there's a lot of other, kind of in that global economy mentality, there's a lot of other things that are controlling this scenario.
Yeah.
Right. So initially, COVID was a challenge, supply chain, all of that. Didn't matter how much the Fed raised rate, you still don't have the supply.
Yeah.
Right. The demand was waning, but you still didn't have the supply coming in. So I think the challenge is there in terms of just getting inflation under control. But historically, every single time that we get into a recession, interest rates do come down.
Yeah.
Right. So I see at some point, whether it's the first quarter or the third quarter of next year, this recession will put pressure on interest rates. Interest rates will come down. And I think if there is any type of inventory and supply, you will see the consumer come back out very quickly.
Yeah.
Because rents are still rising.
Yep.
We know that we are technically under inventoried as a country. Millions of homes.
Yeah.
Right? I've heard as high as 7 million. Builders are starting to catch up, but all of that 08 kind of dead.
I was going to say, a lot of people forget that from like 08 to 12, 13, nobody was building.
Nobody was building, right? And now you have, I think, the consumer, although they're waiting longer now to become first-time home buyers. Used to be in your 20s. Now it's more early 30s. Those people are there. They're here now.
Yeah.
They want to buy. So ultimately, I think we are really kind of lining ourselves up for another very good cycle which is why in my mind, I'm talking to all my people about how are we preparing for that today? Right? In this talk I gave the other day, one of the slides on my PowerPoint was, the best time to plant a tree was 20 years ago. The next best time is today. Right? So I think that's what we should be focused on. Right? There's always going to be the transaction, and the more you prepared 2 years ago, the better your business is at this tougher time. But that will change. This cycle will end, and we will enter into another very good cycle. So I'm really big right now on pushing people to prepare for that. What are you doing to get ready for that next good cycle?
So what are some of the things that you're teaching your team or your company and your loan officers? What are some of the things that you're teaching them to use to prepare for that?
Yeah. So we talked about it before, relationship building. Interesting stat. I'm not proud of this stat, but as a mortgage industry, approximately 18% of consumers, only 18%, go back to the original loan officer who did their loan. Okay. Wow. So now I can't believe that we all do a bad job. But on that loan, the first thing I say is, hey, why don't we start with this? Let's do a great job on the first loan we do for the customer, right? And we increase our odds. But I think what we do a poor job at is staying in touch with that customer. So right now we're talking about how is your database where it needs to be? Is your social media where it needs to be? Your drip campaigns? Are you contacting this customer on a quarterly basis? Even a text, a phone call. They know who you are. They're not going to block your number. Right? So just stay in touch with them. That way, when rates do come down, again, like you said, top of mind, you're the one they're going to call. So really it's about database and dealing with your past customers and making sure you're teed up there. And then the other thing is building relationships with people in your side of the industry. Right? It's the next 12 months. All I'm going to do is build relationships. And when rates come down and inventory is there, I'm going to know these people, right? They're going to want to do business with me because of the things that we talked about, which is, bringing value, building trust, all of that.
I think it's so important to talk about like the follow-up with past clients too. I mean, honestly, I think everyone will admit that's one of their biggest weaknesses. I mean, I know it's one of mine. It's same thing. One of those things that just recently I'm like, you know what? I need to become better and more focused at this. For years, I worked in business to business sales. That's easy. You have to follow up with them all the time. Otherwise, you don't get any continued sales, right? And with real estate and in mortgages, I think it's so easy. Like, okay, it's a one-time transaction. You probably won't hear from that person again for another 7 years, right? And so, but, and I think also, I think a lot of agents and probably loan officers get the same thing in their head where it's like, well, what do they want to hear from me about? But they do. And because every time I run into one of my clients, right, they all want to know what's going on in the market. And I even stress with the agents on my team, I'm like, think of yourself as like a stockbroker, right? Or you're managing someone's finances. They want to hear from that person all the time. What's going on with the stock market? What's going on with my money? And I said, people look at real estate the same way, right? Because they've made an investment in that home and they want to know, is that home, is it appreciating? Is it depreciating? Is the market going to crash? Where are we at? So I think it's really important for following up with clients for that, just even if it's not even on a personal level, just for the sheer professionalism of checking in with them to say, hey, just want to let you know, here's what's going on in the market. Here's what we're seeing. I think giving those type of stats to the consumer, because that's what they came to us for in the beginning anyway, right? I think it's so easy for us to forget that sometimes that's what they came to us for the first time was that expertise and that insight. So I love hearing that. Let me ask you something from your position, in talking about opportunities for agents, because it's always easy to look from the outside at someone else's business if you're working with them and say, oh man, if people did this just a little bit differently, right? I mean, you and I talked about, and I think that's how we got in the conversation about relationships, because I said, wow, there's a lot of lenders I have never heard from for years. And then all of a sudden, I mean, literally every day I get 3 to 4 phone calls, right?
Of course,
And I respect it. Look, hey, they're hustling, right? But the long game would have been if they were contacting me 2 years ago.
Exactly.
Right. And creating that relationship and being top of mind. So I think that is really important. What opportunities do you see for agents in this market right now?
I think if I would be looking at investors. I mean, if that, to me, that's number one. There's some great programs on the lending side that make it very flexible and easy for more sophisticated investors. But if I think there's going to be any sort of correction or settling of prices, why wouldn't I as an investor want to be poised and ready when that happens, and again, interest rates come down a little bit in that same timing, why would I not want to be looking at investment property?
Okay.
To me, that's
like rental properties. Is that
absolutely.
Yeah.
Yep.
Yeah.
Yep. I think that is that to me is a target.
Yeah.
Right? And going back, database mining, understanding who those investors are, past clients that you deal with. But I love the investment side, and I think that's going to be a great opportunity moving forward. I think rents are going to be strong for the long term here in Las Vegas. First time home buyers are a challenge, right? And so you have to look at that as sort of a long play.
Yep.
You're grooming that kind of sector. Move ups are a challenge right now too, right? Because of what we discussed. I've got a lot of equity. I have a great interest rate. Why do I want to move?
Yep.
So I think in terms of one particular sector, I like investment strategy, but I think you're in the same position that as a loan officer that I am. It's about building for that next cycle.
Yeah.
Right. I don't think there's any magic right this moment.
Yeah.
I think it's about building for that kind of sunnier time and being ready to take advantage of that.
I agree. Yeah. And it's one of the things we've actually pivoted to with my team is that we've been taking all of our listings that are under a certain price point, coming up with the rental values on those, the rental comps, arranged, sharing those with our database. And it's amazing how many homes we've sold for that reason. Our clients that, are high-end clients that were looking to sell or buy at one point that have said, we're going to wait, but they are interested in rental properties now because they also know that the first-time home buyer probably just fell out of the market. They're not going to be able to buy for a while now because the interest rates have gone up. And so now they're looking at renting again. And so that rental market is just increasing ever more. Yep. And so I agree with you. I think that's a great opportunity for them right now. So
yeah, that's where if I was to focus on something right now today, that's what it would be.
Yeah.
And not necessarily that if you approach me, I'm not sure I'd say, hey, Darin, I'm ready to buy today.
Yep.
But I want to be teed up and ready to go, Q2-ish of next year.
Yeah.
And let's be working together, start showing me properties. I want to see some price reductions, maybe, I don't know, certain neighborhoods, but really getting me prepared to making offers at some point within the next 6 months.
So one of the things I wanted, and talking about opportunity, you shared this with me the other day. Your strategy now, what you've done is moving towards acquiring other loan officers from brokerages that are maybe closing, or maybe they're struggling a little bit, and you can adapt them into your systems to help them build their business. Mm-hmm. Can you talk a little bit about that from a business standpoint? Because I think this relates to any business.
It does. Yeah. I think, look, in challenging markets, no matter what business you're in, people they're looking for answers.
Yep.
Right. So from our side of it, it could be leadership. They might need new leadership. They need somebody with a vision. Mm-hmm. They might need more support at the ground level, ideas, marketing, whatever it may be. They're not getting what they feel they need in their current situation.
Yeah.
And I think that is the opportunity for people like you and I to, and not just bring them over, but actually provide actual true leadership and bring them value, right? I talked about the other day, you got to be the real deal.
Yeah. Yeah.
Right. You can't just talk about it.
Yeah.
You got to actually deliver.
Yep.
And that's what sets you apart from other people, right?
Yeah.
I mean, I know that about you. If I joined your team, I would have a certain expectation, knowing it's going to be met.
Yeah.
Right. And that's the key. And that's what we need to do. So I'm looking for opportunity. I'm seeing more movement right now on the loan officer side than I've since 2008. Haven't seen it since.
Really?
Absolutely. There's a lot of movement for the reasons I just mentioned. So I'm trying to position myself to bring those things of value that they may be missing. The other situation is simply we're seeing some mortgage companies just simply fail.
Yeah.
Recently, a large national lender says, owned by a hedge fund, says, "Hey, I don't like the mortgage business anymore. We're done."
Yeah.
Right. 100 and some odd people get a phone call that today's your last day at work.
Yeah.
Right. So those are starting to occur. Smaller operations are realizing that they don't have the economies of scale to operate. So that's where I think we're at. Again, it's you got to be in the right place at the right time. You always have to be hustling. But I think if you're positioning yourself that way, you'll find those opportunities and you'll be able to take advantage of them.
I love that, and I've even shared that with agents. I've told agents to look for agents that are near that period in life where they want to retire.
Yeah.
Absorb their business, right? Work out a deal to assume their business and take that over from them. There's so many opportunities with that. There's got to be thousands of agents out there that are ready to retire. Yep. And that's the one thing about real estate. There's not really a retirement program, right? So most agents get into it, the business, they most survive year to year, but you get 3 agents that you can assume their business that are doing 12 transactions a year each. You just added 36 transactions a year to your bottom line. Yeah. And so sometimes, even though they may seem small, if you can assume that, and that's one of the things that I've been talking with the agents on my team about, look for those opportunities where people are looking. And also there's maybe an opportunity now where people who jumped in 2 years ago who can't survive this because they're new, but they've got a good amount of business. Maybe they're doing 8 to 10 transactions a year. Work out deals with them. Tell them to keep their license and refer you deals, and work out deals with them to assume that business from them so that you can keep going and they can go back to work and do whatever they want to do.
Well, see, you're pointing out those sort of grinder mentality scenarios that you got to have right now. Like I said, there's no magic in this particular market. You got to find and pivot your business. And I think, one of the advantages I feel that we've had versus some of the larger companies is, shifting and pivoting for some of these large national mortgage firms. It's like moving a tanker.
Yeah.
Right. Yeah. It takes them months and months to make decisions, much less, quick action is impossible. So I think that's critical. And so for you at your level to be able to identify those opportunities, like at the end of the day, your people are either going to do it or they're not.
Yeah.
Right. That's up to them.
Yeah.
But your leadership is to say, hey, we can go hide under the covers at home, or we can get out and hustle. Yeah. Right. And we can really seek out these little opportunities, little nuggets of opportunities to get us through to that next cycle, as I keep saying.
Yeah. And that's the one thing I've told them, now is the time more than ever, because it's interesting that, when the market slows, you think people would put their foot on the gas a little bit more, but it actually does the opposite.
Yeah.
A lot of people lose momentum because they just accept, well, the market's slowing anyway, and that people probably don't want to buy right now. People probably don't want to sell. So I don't want to bother them. Right.
That mentality.
Which always makes me laugh in sales. I'm like, what do you mean you don't want to bother someone? Like, unfortunately, that's part of your job. Yeah. Like, you're going to have to bother people in order for them to buy from you. But, that's to me is really what's important right now, is putting your foot on the gas, stepping up. You're going to have to probably work a little bit harder, grind a little bit harder. We've all gotten comfortable in the good times. I mean, that's easy to do. I think that's human nature that we all do that. But yeah, I mean, I love looking for those opportunities. How many offices you have right now? How many total loan officers you have?
Geez, we're at approximately 300 loan officers.
Wow.
In multiple states.
Okay.
About 30 branch locations.
Wow. Okay.
In various states. But I want to go back to one thing. I think we also have to really plan better.
Yep.
Right. As sort of within our own households, within our own scenarios, we really have to plan better. And I think one thing that has been an advantage for me, going back to living in the same house for 23 years, is that we were fairly well prepared.
Yeah.
A lot of people, they spend, right? Their businesses are doing well. They take out of it. They spend the money, vacations, cars, whatever it may be. Well, I decided to reinvest back into my company, right? So now we're better positioned to take advantage of the failing mortgage banker that just can't make it work, or bring on 100 loan officers in a particular state. That takes capital. Yeah. That takes a little bit of patience, right? Because the payoff doesn't come right away. So I think for us in our industry moving forward, we all have to reset our minds and understand that we can't live the lifestyle way up here, because the business will fall and we will be down at a different level at a certain point. And if we're prepared economically for that, you can really take advantage of opportunity at that point, because you've got cash in the bank, you've got some horsepower to make decisions and to market or to push further, right? To kind of step up while others are retracting. And I think that's a real key for me right now.
I'm so glad you brought that up, because it's the one thing consistently that everybody who I've talked to who has grown their business during the downtime all share that same thought process, that now is the time to, you save during those times when the market's really good, so that when the market slows a little bit, you can capitalize on that, right? Yep. And you have the opportunities. Almost everybody I know is doubling down right now, spending more, and essentially not spending money in the wrong ways, right? They're not
No.
remodeling their house or remodeling their offices. They're spending more money in infrastructure and marketing and things to acquire new agents or new loan officers. So I think that's such a great point also, is that I think that's the other thing that happens, is that people naturally, again, they let their foot off the gas with selling, but they also do the same, like, oh, I need to start cutting expenses because the market's going to slow. So I'm going to cut everything instead of stepping it up. Yeah. And that's where, and again, I think that's where you can get that, you can leapfrog, right? Because if while everybody lets their foot off the gas now, and there's less competition, spend that money now to get yourself out ahead of everyone. I'm doing things now that, I've never been big on direct mail campaigns. I'm doing direct mail campaigns right now. I'm doing everything I can and ramping up so that when we do come back and the market picks back up again, now we'll be that much further ahead of it and in front of it. It's the same reason I got my license in 08. I always tell people, they're like, why would you get your license in 08? I'm like, dude, I wanted to start at the bottom. I didn't want to start at the top.
You did.
I started at the absolute bottom and everything. When I started, I think there was 4,500 agents, if I recall correctly. It had gone from like 11,000 down to 4,500 agents.
Yeah.
And so I've had the opportunity to ride that up and learn in a really bad time or a really bad time and be able to operate through that and grow. So now everything, this seems easy right now, and actually our business is growing because of some of those things that we've put in place. I wanted to touch a little bit on, as we wrap up, is on online. How are you seeing, and I know one of the things that will set you apart is the relationships, but how are you seeing over the years, the Rocket Mortgages and that type of stuff compete with you? Is that taking a big impact on your business?
Sure. Like you guys are seeing on the real estate side, you've seen it in the last couple of years. Well, we've been dealing with it for many years, time, right? Yeah. Look, I think that they have a place in the world, and they provide a great service. Those are great companies. Can't have nothing bad to say about them. But they don't work for everyone. And earlier I made a comment. Thank goodness this is still a relationship business. And I think that's sort of the counter to the Rocket Mortgage, is that your typical consumer wants more leadership. They want more of that advisor relationship with someone who, by the way, is assisting them with the largest transaction they'll ever take part in. Right? So I think we have that. We always feel like we can count on the real estate community, and we appreciate their loyalty to us. Because again, they want to know that they're handing their clients off to somebody who can provide that leadership, not just someone sitting at a 1-800 number. Right? So I think again, they have a place in our world. They provide a great service, but they are not for everyone. Right? It's just like not everybody loves Starbucks. Not everybody wants to go to Whole Foods. Right? No, it's just we have. I think there's enough business for everyone to participate in. I think that what those companies did give us was leadership in terms of forward progress in terms of technology. Definitely. So I will give all credit to the Quickens of the world when we say, hey, now if you send a customer to All Western Mortgage, if they want, I never have to speak to a loan officer. I can do everything online with a fantastic consumer-facing technology that allows them to upload safely, to download bank statements and grab pay stubs from ADP and all of that cool stuff. And that was really sort of started and driven by companies you mentioned there. So I think they did bring value to us and have kind of brought the industry ahead. Well,
and the one thing I think that and agree. I hear agents all the time knock them. Oh, it's not going to hurt our business. I always share this with people. I worked in the fitness industry for a long time. That's when I had my health food store. I always was the guy that said, oh, the health food, will never be affected by online. Amazon absolutely crushed the brick and mortar retailers because they lost sight of it, and they would never acknowledge what those companies were doing well. So they didn't change with the business, right? They didn't create that level of service that the consumer was looking for.
Demanding.
And again, you can't change consumer demand. If that's what they want, you better ride with it and figure out a way to be in front of it. Otherwise, you're going to be out. And I feel that same way even for agents now with like trying to compete with Zillow and that type of stuff when they say, oh, there's no competition. You can't replace what I do. Well, these are really smart people that run these companies. They'll figure out a way to replace it.
I think what you can't change what's happening. But you definitely have to use what you're seeing and take that information and make yourself better. Right. You've got to adapt, continue to grow. On our side, as I mentioned, whether it was technology, whether it's the concept of becoming that mortgage advisor, and not just an order taker. And it's the same for you guys, right? What are you doing? What are you doing to really set yourself apart from the Zillows and the Open Doors of the world, right? That's really what we have to do.
Yeah. And that's the one thing I've noticed that the technology companies do a really good job at, is they do a really good job streamlining things for the consumer. Right? They make it really, really easy for the consumer to do whatever they want to do, whether it's shopping online, whether it's buying a house and getting a mortgage. I mean, now like with what Zillow's doing with, Zillow's got their own mortgage company and Zillow has their own title company. And now they've partnered with Open Door. For Open Door, since their program, the iBuyer program, didn't work, Open Door's done a better job at it. They've now partnered with Open Door, and now they're this bigger gorilla than ever because of that. And I think that's the one thing the agents, and I think that does go back to relationship, is that creating that good relationship with these partners, whether it's your lender, whether it's your appraiser, your title company, so that you can make that process just as easy and simple for your client, for them to work with you with a little bit more personal touch to it. I think that's ultimately, because I think, when it comes down to it, most people you see go to online, it's because they get frustrated with whoever they're dealing with on a personal level. And that person has made it challenging. I always go back to, and it's really challenging because, with real estate, you can only do so much as far as helping people, let's just say, get a carpet cleaner for their house or whatever. But I think taking that away from the agent also hurts the level of service that you can provide. And that's really what people are looking for. They want you to streamline it and make it super easy for them. They don't want to have to think about it. They want you to, instead of you saying, here's a number of this guy, call him, and they got to call the person and wait for the person to call them back. They'd rather you just handle that for them and take care of it.
No, you're right. And that's that high level of service that's going to set you apart ultimately.
Yep. Streamline it. So, well, awesome, Chris, man. I appreciate you coming in today.
Hey, my pleasure.
And sharing your story and your insight. I think it's really important. I think for me, what I took away from this today was one of the biggest opportunities right now, more than ever, is creating those relationships. Because I think we all have the time now. We've all slowed a little bit. So there's no reason that we shouldn't be out creating those relationships. And it does have to be the focus of our business at the end of the day. So,
absolutely. Hey, thanks for having me.
Of course, man.
Pleasure being here.
Thanks, brother. Appreciate it.